We love reverse mortgages. We know they can improve retirement for many retirees.
However, we know that for some folks, a reverse mortgage is not a good solution, and we don't want you to go down this road if you fall into that category. We want to help you see if a reverse mortgage is a good fit for you. If it is not, then by all means pursue other options for your financial needs. We want what's best for you.
When is a reverse mortgage a bad idea?
When you plan on moving soon. Reverse mortgages have costs, and those costs are most reasonable when you plan to stay in your home a long time. It does not make the best financial sense if your plan is to move in 2 or 3 years. The cost is the same, but your benefit would likely be lower.
When you are too ill or weak to stay in your home. If you really need to be in an assisted living facility, then your ability to stay at home is compromised, and a reverse mortgage may not be the right solution for you. Now, some people do use a reverse mortgage to pay for in-home custodial care, to stay in their home, and that can be a good plan if you do not need a lot of help. However, be honest with yourself. If you have significant needs and need help every day, and even for basic tasks, you may be better off leaving your home for a care facility and skipping the reverse mortgage.
If your situation is dire, if even after a reverse mortgage, paying your property taxes and insurance is going to be unrealistic, then perhaps you need to find a different solution. The reverse mortgage counseling session reviews your budget with an eye towards confirming your ability to afford staying in your home. But at the end of the day, you need to be honest with yourself and with each other. If paying property taxes, insurance, and maintaining your home are not really affordable even after a reverse mortgage, you need to consider other options.
When you don't have enough equity. If your home is worth $200,000 and you owe $150,000, you will not be able to secure a reverse mortgage. You need to have about 50% equity. If you're close, please contact us and we can help evaluate all your options. But if you have less than 40% equity with an honest assessment of what your home is worth, then applying for a reverse mortgage might be an exercise in frustration.
If you have a non-spousal resident at home, a son or daughter, or someone else who is not your spouse, then you need to know that the reverse mortgage needs to be paid off at the death of the last owner. The remaining resident will need a new place to live if enough funds are not available to them to pay off your reverse mortgage loan, or if they cannot qualify to refinance the home. You can leave them any remaining equity so they could have an inheritance or use the funds to secure other living quarters. These non-spousal residents of your home may need a plan when your residence is not available.
Reverse mortgages are a powerful product, but they do not cover every possible situation a retiree can be in. Be honest and realistic. If you fall into one of the above categories, then a reverse mortgage may not be a good solution for you. Meet with your family and trusted advisors and develop a plan that meets your long-term needs.